If you're an immigrant to British Columbia, Canada, and you're looking into purchasing a home, but you're not sure if you can and how the Canadian foreign homebuyer ban impacts you, then this video is for you. I'm going to be going over everything you need to know about the foreign buyer ban, from who can and can't buy, what the qualifications are to be exempt, what the rules are around your spouse being part of the purchase, and more. Additionally, here in BC, we also have a 20% foreign buyer's tax, so just because you're exempt from the ban doesn't necessarily mean that you're exempt from this tax. So stay tuned to learn more. What's going on, guys? Alex Dunbar here, your favorite local realtor based out of the greater Vancouver area. In recent years, I've helped tons of individuals just like yourself who didn't have their PR yet to purchase a home and learn more about if they're able to avoid the 20% foreign buyer's tax. So if after watching this video, you want to find out more about how we can make that happen for you, reach out and I'd be happy to help. My contact information will be down below, or you can book a call with me using the first link in the description at a time that works best for you. And just before going any further, I want to make the disclaimer that I am not a lawyer and this is not legal advice. I'm merely sharing information directly from government websites and my own experiences, and I suggest you seek your own legal guidance from a qualified professional. Additionally, you should also get in touch with the appropriate government authority to confirm any and all questions regarding your unique situation. And with that, let's get right into it. The foreign buyer ban, more formally known as the Prohibition on the Purchase of Residential Property by Non-Canadians Act, was passed by Parliament on June 23rd, 2022. But these regulations didn't come into effect until January 1st, 2023. This was done as part of the Canadian government's strategy to make housing more affordable for Canadians. The ban on foreign buyers buying residential property in Canada is currently in place for 2 years until the end of 2024. However, more recently, the government of Canada has made some amendments to the regulations to expand exceptions to allow non-Canadians to purchase a residential property in certain circumstances. This was done with the intent to enhance the flexibility of newcomers and businesses looking to add to Canada's housing supply. These amendments officially came into effect on March 27, 2023 and opened the door for many more non-Canadians to be able to purchase homes. But what exactly were these amendments and how do they help you? Well, let's further explore them. So I'm now going to share my screen with you and go over an article from a government website from the CMHC that goes over what some of these amendments were. So, amendments to the Prohibition on the Purchase of Residential Property by Non-Canadians Act's accompanying regulations. So the following amendments are being announced by the Minister of Housing and Diversity and Inclusion. Enable more work permit holders to purchase a home to live in while working in Canada. The amendments will allow those who hold a work permit or are authorized to work in Canada under the Immigration and Refugee Protection Regulations to purchase residential property. Work permit holders are eligible if they have 183 days or more of validity remaining on their work permit or work authorization at the time of purchase, and they have not purchased more than one residential property. The current provisions on tax filings and previous work experience in Canada are being repealed. So the big thing here is if you have 183 days remaining on your work permit, you are able to purchase, given that it is the only property you're purchasing and it's for your own use, not a rental property. Next, repealing existing provisions so the prohibition doesn't apply to vacant land. We're repealing section 3.2 of the regulations so the prohibition does not apply to all lands zoned for residential and mixed use. Vacant land zoned for residential and mixed use can now be purchased by non-Canadians and used for any purpose by the purchaser, including residential development. So now you could purchase vacant land in order to develop. Exception for development purposes. This exception allows non-Canadians to purchase residential property for the purpose of development. As we just covered, the amendment also extends the exception currently applicable to publicly traded corporations under the Act to publicly traded entities formed under the laws of Canada or a province and controlled by a non-Canadian. Moving on, increasing the corporation foreign control threshold from 3% to 10% for the purposes of the prohibition with regards to privately held corporations or privately held entities formed under the laws of Canada or a province and controlled by a non-Canadian. The control threshold has increased from 3% to 10%. This aligns with the definition of specified Canadian corporation in the Underused Housing Tax Act. So for most people, the category you're probably going to fall into is if you have your 183 days or more validity remaining on your work permit. But of course, you can also look further into the remainder of these categories. However, from my experience, these are the people that I'm mostly working with. Moving on, I'd just like to address some of the main questions or most frequently asked questions that I get from individuals, and luckily there is a government site that addresses these. However, I'm only going to be going over the primary ones that I think are the most important for you. There will be links for everything I talk about today in the description so you can look into them in further depth. However, starting us off, we have, does the prohibition on the purchase of residential property by non-Canadians Act apply to spouses or common law partners of Canadian citizens or permanent residents? So no, the Act doesn't apply to non-Canadian spouses and common law partners if they purchase residential property in Canada with their spouse or common law partner who is a Canadian citizen, person registered under the Indian Act, permanent resident, or non-Canadian for whom the prohibition does not apply. So this would be the exact situation I just previously went over. For instance, if you had the 183 days on your work permit. However, what you're going to have to keep in mind is that there may be other tax applicable to the spouse. However, there are ways around this, or at least to minimize these taxes. And if you're interested in learning more about that, you can reach out. Next, does the prohibition apply to temporary residents who have studied in Canada and are now working after completing their studies if they've been physically present in Canada for several years? So the people who this applies to is temporary residents studying in Canada if they are enrolled in a program of authorized study at a designated learning institution as defined by the Immigration and Refugee Protection and Regulations, which you can look further into. I'm not going to cover this. Have filed income tax returns for each of the 5 taxation years preceding the year in which the purchase was made, have been physically present in Canada for a minimum of 244 days in each of the 5 calendar years preceding the year in which the purchase was made, and have not previously purchased a residential property in Canada while the prohibition is in effect. Additionally, the purchase price of that property must not exceed $500,000. This is probably going to be your toughest point, especially in our market. All you're going to get is a 1-bedroom condo, and in some markets like Vancouver itself, this is going to be extremely difficult. However, option B, temporary residents working in Canada, if they hold a valid work permit or are authorized to work in Canada and have 183 days or more of validity remaining on their work permit or work authorization at the time of purchase, additionally have not purchased a residential property in Canada while the prohibition is in effect. So again, option number 2 is probably going to be your most likely in my market. These are the people I'm working with most, but if you do have questions, don't hesitate to reach out. Now moving on, what types of residential property does the ban apply to? So residential property as buildings of up to 3 dwelling units and parts of buildings like semi-detached houses or condominium units. The Act does not prohibit the purchase of larger multi-unit buildings containing 4 or more dwelling units. So if you're purchasing something that is 4 or more units, the ban does not apply. However, the regulations clarify that prohibition applies to residential properties located in the census metropolitan area or a census agglomeration. And in the next couple of slides here, I'm going to go over what those areas are. So does the prohibition apply to residential properties located outside of this census metropolitan area or a census agglomeration? So non-Canadians can purchase residential property located outside of a census metropolitan area or census agglomeration. The regulations include an exception for any residential property found outside of the area identified in the Stats Canada Standard Geographical Classification 2021. Both CMAs and CAs are formed by one or more adjacent municipalities centered on a population center or the core. So where exactly are these census metropolitan areas? Well, the Fraser Valley and Greater Vancouver districts are 2 of them. There are also other ones which I'm going to cover shortly here. However, if you're in the market that I service, it is considered one of those census metropolitan areas. So now you should have a better idea of whether or not you are exempt from the foreign buyer ban. But wait a second. Don't get too excited just yet because the 20% foreign buyers tax may still be applicable to you, which might make you reconsider. The foreign buyers ban is a federal regulation, while the foreign buyers tax is a provincial regulation, meaning that they are separate from one another. So let's take a deeper dive into the BC government website to further examine this topic. So looking at the additional property transfer tax for foreign entities and taxable trustees. So essentially this is the 20% foreign buyers tax. In addition to the property transfer tax, if you're a foreign national, foreign corporation, or taxable trustee, you must pay the additional property transfer tax on your proportionate share of the residential property's fair market value if the property is within the specified areas of BC. So your proportionate share is the percentage of interest that you're registering on title with the Land Title Office. For example, if you're a foreign entity, foreign national, or foreign corporation acquiring a 70% interest in a property, you pay the additional property transfer tax on 70% of the residential property's fair market value. So a key example here would be, going back to our previous example, if you were purchasing with your spouse and your spouse was not exempt from the foreign buyers tax, but you were, and potentially you are on title 50-50, then your spouse would be responsible for paying a 20% foreign buyers tax on the half of the property that essentially they're on title for. So $1 million property, half that would be $500,000 and 20% of that would be $100,000. So big number here, but stay tuned. We are going to get to how you can potentially reduce or avoid this. So tax amount and specified BC areas. So if the property transfer is within the following areas, the tax rate is 20% on the fair market value as mentioned. So Capital Regional District, Fraser Valley Regional District, where I'm based out of, as well as the Metro Vancouver Regional District, then the Regional District of Central Okanagan, and the Regional District of Nanaimo. I'm not going to go through every single city in here, but again, I will leave a link. You can take a further look yourself if you're interested in learning a little bit more. The additional property transfer tax doesn't apply to the properties located on the Tsawwassen First Nations Treaty land. That is one of the areas that's exempt within the region. However, once again, I'm not going to go into more detail here. So this is just touching on the transitional rules when it happened originally back in 2018. However, tax on the residential portion of the property. The additional property transfer tax applies on the fair market value of the residential portion of a property located in those areas of BC as mentioned. So here are the three types of classes. Property entirely classified as residential class 1 by BC assessment, you pay the additional tax based on the fair market value. Property classified as farmland by BC assessment because it's used for an owner's dwelling or a farmer's dwelling, and you pay the additional tax on the value of the residential improvement plus 0.5 hectares of land. And lastly, mixed class property that includes a residential property such as a residential condo in a building class 1 with commercial space class 6. You pay the additional tax on the fair market value of the residential property. So for the most part, we're just looking into residential properties and farmland or acreage, for at least for my instance and what I deal with. So now getting to the exciting part is, what are the exemptions? Well, in some circumstances, you may be exempt from the additional property transfer tax. If you're exempt from the property transfer tax, a confirmed BC provincial nominee, this is the most common situation that I deal with, or acquiring a property on behalf of a Canadian controlled limited partnership. So we're just going to focus on a confirmed BC provincial nominee. The British Columbia Provincial Nominee Program, also known as BC PNP, is an immigration program jointly administered by the province and Canada under the Canada-British Columbia Immigration Agreement. Through the BC PNP, BC nominates applicants who help address the province's unique labor market needs and contribute to economic development. However, BC is only allocated a set number of nominations each year. There are certain occupations which the government has labeled as priority occupations, which can help you fast track your BC PNP status. This includes the following: certain tech occupations, healthcare and childcare occupations, and other priority occupations such as veterinarians, animal health technologists, and veterinary technicians. I'll include a link to the full list of priority occupations in the description for you to further explore. Additionally, your employer may be able to help you acquire your BC PNP status. For example, I have worked with many Amazon and Microsoft employees who are able to get assistance from the company in order to get their BC PNP and eventually their PR. So I suggest you speak with your current or future employer about it and how they may be able to help you in the process. And so what exactly are we looking at here? So BC provincial nominees, if you're a BC foreign national individual who receives confirmation under the BC provincial Provincial Nominee program, you do not pay the additional property transfer tax if you claim the exemption. So to qualify for this exemption, you must be confirmed a BC Provincial Nominee when the property transfer is registered with the Land Title Office. The property must be used as your primary residence, so it cannot be a rental property, and the property transfer must be made to an individual. So the BC Provincial Nominee is the individual named on a valid nomination certificate issued by the province. Family members, including a spouse or common law partner, are not exempt from the additional property transfer tax and must pay the tax on their proportionate share of the property if they're also a foreign national. So this is important here because oftentimes I will have a couple where one of them has a BC PNP, the other does not, and in this situation they will be exempt from paying this additional tax. However, the spouse won't be. Now, in some situations, we've been able to have a 99-to-1 ownership on title. This is not legal advice. Please check with a lawyer. However, we have been able to have people that have done that in the past, and now the foreigner that doesn't have the BC PNP has only had to pay that 20% tax on their portion of the purchase, which is 1%. And we will get further to this actually in the sense that if you receive your PR, your permanent residency, within 1 year after purchasing, you're actually able to get this amount refunded, which we will cover shortly here. So moving on to how you can actually get the refund for the additional property transfer tax. Well, you may be eligible for a refund if you became a permanent resident or Canadian citizen within 1 year of the date of the property transfer was registered with the Land Title Office, or the tax was paid in error, which we're not going to go into because we're focusing on if you become a permanent resident or Canadian citizen within 1 year. So what does this mean? In addition to becoming a permanent resident or Canadian citizen within 1 year of the date the property transfer was registered with the Land Title Office, to qualify for the refund, you must also have used the home as your principal residence, so it can't be a rental property, moved into the home within 92 days from the date the property transfer was registered, continued to live in the home as your principal residence for at least 1 full year after the date of the property transfer was registered, and not received a BC Provincial Nominee exemption. To clarify here, you can't try to trick the system and purchase it, live in it for a couple of months, and then rent it out afterwards. You have to actually live in it for a full year. However, if you purchased multiple properties as a foreign national and became a permanent resident or Canadian citizen within 1 year, you can only claim a refund on your personal residence. So you must apply for the refund after the first anniversary and before 18 months from the date the property transfer was registered at the Land Title Office. And note, you must become a permanent resident or Canadian citizen within 1 year of the date of registration, as already mentioned. In addition, all other requirements must be met. Foreign nationals who purchase residential property expecting that they will be able to get a refund should know that they are taking a significant risk. No guarantee exists that their permanent resident status will be completed within 12 months of the first anniversary of the date of registration. So just because you have been given a timeline, an expected timeline, doesn't necessarily mean it's going to happen. Now, if it's 3 months or 6 months, you would expect it to, but at the end of the day, these are not guarantees. These are only expectations. So understand that if you're going this route and you're trying to get the refund back by becoming a PR, getting your PR afterwards, that there is an inherent risk. And that's about going to do it for today's video. So if you did get any sort of value whatsoever, all I ask is that you hit that thumbs up button. And if you'd like to see more videos just like this one and want to be the first to know about it, you should consider subscribing to our channel. Lastly, if you are considering buying a home anywhere in Greater Vancouver and want to discuss further how the foreign buyer regulations may impact you, then you can scroll down and click the first link in the description to book a call with me at a time that works best for you. Thanks so much for watching, and before you head out of here, make sure you check out another video on our channel, and we'll see you in the next video.